Welcome back, everyone. The purpose of this video is to recap some really important trades from last week. We had several that went for over 100% on the returns, including one on Facebook that I just completely missed, which ran for 868%. So that was a mistake on my end. And I'm going to break down some of them. Namely, I want to break down PTON. PTON because it had a bullish options flow, but I called it out to the downside, bearish. I'm going to explain why. We also had AMD, which ran for 129% on one of our plays, but that's not what I'm going to touch on. I'm going to touch on the 39% from yesterday. And of course, I'll circle back on that Facebook trade. So let's get started. We're going to start right here and dig right into it with PTON. Now, first thing to discuss is, yes, there was a bullish flow. I'm going to put that up on the screen. You could see it was slightly bullish. It wasn't the most heavily bullish flow you'll ever see, but it was bullish. So why did I call it to the downside? I just want to touch on that. And for those of you who like to go into really deep detail, you know that I make my videos to be concise. If you want to go into deeper detail and understand all the nuances, check out profitstaken.com. For the purpose of this video, I'm going to explain what you need to know. So we talk about different methods of identifying and building a trade, and I think that is one of the things that a lot of people are looking for, right? So it's not just one data point. This is what I preach. And I criticize all the fake gurus out there, the furus, because most of them really don't know what they're talking about. A few weeks ago, they probably had a random job before they figured out they could run a scam here. They hide their identities. They don't really explain their methodology. And they always talk about, oh, well, there's a key level here and a key level here. But there's always one to the upside and one to the downside. That way they're right no matter what, right? So this is one of those points where I say, well, there's no one specific data point that makes a trade perfect. And I'm going to give you an example. We're going to look at PTON, but I'm going to expand on this point to really cement the idea. So let's say that we have a level, right? We're going to say, oh, here's a great, perfect resistance level at, let's say, I don't know, let's say $37, right? And we're trading around that range. And then news breaks saying that PTON has come to an agreement with Amazon and they're going to be picked up for acquired for $45 per share. And you had a resistance point at $37.80. Do you think that your resistance point, some magical line on a graph, is going to hold up to real life events? The underlying activity, the fundamentals, the reality of the stock will always supersede every imaginary line. That's why we often say with technical analysis, and I perform technical analysis. I apologize, not so technical in enunciating it. But we often say, well, it's a support line, but it could also be resistance. Well, the idea is they're very vague guidelines that just help you identify when you've done the rest of your homework. Otherwise, it's nothing, right? Because I can have the greatest resistance line at $37.80 and news breaks that PTON's being acquired by Amazon. The acquisition is going to go through for $45. Do you think that this little line on a screen that I draw is going to hold up to that? Do you think it'll serve as resistance and prevent the stock from breaking through? It's not a video game and it's not fantasy world. It doesn't work that way. That's marketable, and that's where people sell you on different packages and try to tell you, hey, I could teach you how to trade stocks in 3 easy steps. Sign up for my course. There's no 3 easy steps. I do go into deeper detail and I have one-on-one coaching sessions, and the first thing I explained, there's no magic silver bullet. I've been doing this. I was a professional in 2005. There's no such thing, and I use the news example to prove any level or key level can be shattered by reality. In the same way, I combine multiple data points, but you have to weigh them out. Sometimes you'll have news that's sideways. It's news that's really not significant. We could break and say there's a reiteration of neutral position at $39 instead of $42 on PTON. Would that make the price fall? No, it's a little bit of a downgrade, but they're remaining neutral. They've only adjusted their pricing ever so slightly. Is it negative news? It has a negative tinge to it, yeah, but it's not significant. So in that case, I would revert to price action. I would revert to options flow. I'd revert to technical levels to better formulate my trade. So it really depends on what the most significant item is. And that's why real trading, professional trading, if you speak to any professional, you'll get laughed out of the room if your whole idea is, well, I found a line on a graph, right? Like, look how many times that it bounces off this price point. That must be resistance. Today, sure. But what happens when it breaks it? Oh, broke resistance. That's now support. You see how there's always an answer one way or another? that's just word games, right? So let's take a look at this. Why was I bearish on Peloton despite a data point suggesting the upside? And again, I'm going to put that on the screen for all you guys to see. Not overly bullish, but bullish, right? Well, so it wasn't sold. So rumors tend to inflate a stock price. Peloton was being divested by institutions, and there are institutions still holding on to their positions. So a week or two ago, we saw a massive dump in Peloton. Everybody remembers that super red day. I actually called Peloton to the downside that day as well, and I said institutions are looking to offload. This is a losing proposition. I do feel McKinsey, who Peloton brought on board, will help them right the ship. But for now, institutions are not feeling very bullish. They're trying to divest their positions until there's more clarity, until Peloton's been leaned out. And of course, as I said, now we see them leaning out. They're laying people off. They're cutting costs. They're looking at their strategy. They're shoring things up so that they could be an attractive investment or acquisition. And they're trying to focus on profitability. So I knew that there were still institutions that were holding because they didn't like the fire sale. What do I mean by fire sale? So when an institution scales out of a position, and that's what they do, they scale out, they sell in blocks, right? So you see there's 62,000 volume, 133,000. You'll take some position out. Take some position, then you wait, you take a little bit more. You wait, you take a little bit more. And what they're looking for is opportunities. So when they see a move up, they're going to sit back and they're going to see how far that can extend. They might shelve a little bit out here, scale out a little bit here, just for example, and then you're going to wait to let it move. I felt like institutions saw that there was strength from the retail market, saw that there was strength on rumors that was pushing in between the $39 and $40 range. Now this becomes technical analysis, right? But it's more than just drawing a line saying, oh yeah, dude, look at this, look at how it resists. Well, there was no real line here to draw. That's why a lot of the technical analysts or people who perform technical analysis always say, how do you get to your price points? Well, I'm not just looking at a line on the chart. I'm combining this with news, with history, and with underlying, right? So I know that institutions have been looking to scale out. So they've sold hard whenever it's moved up because they're looking at an opportunity. And that fire sale where one of the institutions dumped over 1 million shares and we saw Peloton get halted, it threw things off. Because if we see a big move down, right, like there's an absolute fire sale, like we saw that week ago where we just sell off and we're down to, I believe it was the low 30s. Do you want to get out there if you're an institution? No, you don't want to get out at the lowest price. They want to sell at the highest price. And if I were here and I were to dump off 2 million shares, this is what would happen in the price. We go straight down and would likely get halted. So it's not intelligent to have what I call fire sales. Rather, you scale out. So I felt like institutions are waiting till we get back to that area, right? Again, and this is qualifying the position, not just saying, called it. Anybody can guess and call something, be right every now and then. Particularly when you call out calls and puts, you can never be wrong. So it's a word game. I was waiting for institutions to get to this point, and I knew that they were going to start shelving off, and they did that. They let retail take control again. Retail pushed up again. This is all on speculation, rumors, and then you saw the institution selling, selling, selling. So the point is, sometimes we can have options flow data. You know that I use it as a critical element in formulating my trade thesis. And so many of my trades are aligned with where the option data and options flow are going. But that's not what I rely on. A real trader doesn't look at one data point, get married and committed to it, and say, that's it. That's all I'm doing, right? Like you could look here and say, oh, this is a resistance line. It won't go lower here. Look how it got rejected. It bounced around here. So this is our zone. No, because it went down. A real trader is looking at multiple data points. Why do people resist this? Because it's not as attractive. It's not as fun. You can't learn in a 3-day course that there are multiple data points to examine. So you get a lot of con artists running around on Twitter saying this is how it works, renting cars, taking photos at places that aren't theirs, and then eventually making enough money off of people to actually buy things for real. Guys, remember, this is a profession. There are professionals whose lives are dedicated to understanding and analyzing individual securities, price action, and setting up algorithms for institutions. You're not going to become profitable off of the stock market of taking a crash course from some guy who posts his watch photos and who has no credibility, no history, no education, and doesn't even qualify their position. So be careful with your money, but also know, and the point here is I'm proving, there's no one magic bullet. It's waiting, right? Now, if we were here, right, if we got to this point, news broke and said the deal's going through with Amazon, I would have scratched this trade. Scratch just means abandon. And I often post updates saying scratch were out, I would have canceled it, right? Because again, it's not some magical line that I'm committed to and has to happen because I called it out and I want to retweet. It doesn't work that way. You protect your capital and you deal with reality, not figments of your imagination, not little numbers or lines on a graph that look good. You deal with reality. So if we had an acquisition actually go through, which I think it takes a little bit more time, people are a little too overzealous on that, then we'd know it's going to the upside. I'd pull out, right? I might not even necessarily look to the upside because price action could become erratic, but I would withdraw and I would scratch this trade. So that's the story on PTON. We went against the bullish flow, multiple points of data. Look at the full story. And if something goes sideways for you, withdraw. If it's conflicting, that's probably not a good trade either. If you have some slightly positive news, but a slightly bullish flow or bearish flow, and then you have mixed price action data, that's probably not a good one to pursue. There are 16,000 stocks, thousands that are optionable. Find one where you have high conviction. Remember, you worked hard for your money. Don't just throw it into a half-baked idea. You deserve better than that. Your money deserves better than that. Let's take a look at AMD. And this was a tough one. So I'm going to pull this chart up right now, and we're going to see AMD. AMD was a tricky one. So we actually entered right here, right? This was an entry. And you could get 39% here. That's what our total result was. So why was that? It's because the IV was slightly depressed on the calls. So it worked in our favor because we had such a strong breakdown, then we moved up. But this was a little bit difficult to execute. So first of all, a lot of people on Thinkorswim has been having issues this week. So if you have noticed that, it's not just you. I posted on my page at Profits Taken, and that's on Twitter. And I noted that there's been lag, people having a hard time getting filled. But this is what we call a quick trade. So you had a very short window. There's about 5 minutes to make your money. Some people tend to struggle with that. But the overall direction was bearish. Now, I like to have bigger moves, right? So what do I mean by that? I like them to be sustained a little bit longer just because it's easier for everyone. But I can scale in and out, and I certainly won't lose when we peak at 39%. Even if I'm at 24%, there is no way I'm losing after that. I am setting my limits. I'm moving up my stops. In the worst case, I'm going to break even. But what happened with AMD that changed it substantially? Well, I've been piecing it together because I actually thought it was going to move up. And so for all the right directional moves that I am able to anticipate, and you could look at my record. I think someone calculated that said there's something like 109 out of 117, which is, it's great. It's uncanny. You can scroll through my feed, look at it for yourself. There's no nonsense. It's not calls and puts, so I'm always right. I'm convicted. I put it out there. I'm willing to be wrong. I'm saying this is my direction. This is my entry. What happened here? Well, despite having this 39% move, which I'm really looking for, my main item is I'm looking for a move. We had a breakdown. I didn't expect the breakdown. I still got my move, and 39% is great. And if you took less or 24, whatever it is, that's still fine. But I still had to know why, because it's important to me. I don't care that I just made money. I review my trades. Sometimes I'm more critical on myself over trades that were successful than I am on losing trades, because I'm able to look at it and say, okay, well, I lost, but I stuck to my protocols. I understood the direction of the trade. My entry just wasn't perfect. It happens. There's nothing I could have done better. When I look back at this trade, I'm fine with the opportunity that we had and isolated, right? Because I know that it would be very hard to lose, right? You're entering here, you're up 39%. You should be moving your stops up, protecting, maybe you break out even. But I didn't expect this much of a breakdown. Now, we can say, look, it was the market. And some people say, oh, the market faked us out. I can't stand hearing that. Go back and research. Figure out what happened in the market. I've been calling indecision. We had a little bit of a dump off. Are there geopolitical factors? Yes. You have to learn from not only your mistakes, but your successes. Learn from everything and criticize and be critical. If you take a bad trade and you make money, you better triple check that, because if it gives you a false sense of confidence, you'll eventually lose, only you're going to lose a lot more than you had initially planned because you're going to have this false sense of confidence. So I look at AMD and I was trying to figure out what happened. Well, as you'll see on the screen, AMD acquired Xilinx. Now, is that a bad thing? They issue 400 million new shares. So we talk about dilution, and it is dilution, and I named that dilution, but there's a little bit of a wrinkle there. They're also acquiring assets. So while you're diluting, you're also enriching your position. So that's not necessarily a reason for a move down if you paid a proper price. If you overpaid, there's a loss because it's a loss of revenue from the company, or you're just looking at the future. What I think happened here, and it isn't technically allowed in the United States, but this was also approved by regulatory bodies in China, which tends to yield some interesting results. I hesitate to trade some Chinese companies that are heavily based out of China just because of the way they manage their markets, and just because I've seen things over the years consistently for China-based companies that seem, I don't want to say manipulated, but feel manipulated or feel used in a different way, because you could say all markets are manipulated. So what I believe happened was, I believe that Xilinx has 400 million shares being allocated, but they haven't been allocated yet because the deal just got approved yesterday. I think they were selling in advance because this was one of the biggest losers, I believe the biggest loser of the day. And that's not normal. Did the market dump off? Is this normal? Did we see this across the board? Yes, but it was exacerbated even more with AMD. So I had to go back and figure out what got missed. Well, I knew about the story, but what I'm pretty confident happened, and the rumors are, or it's pretty clear based on the graph, Xilinx started selling their shares. So how would you think of this in simple terms? Let's say that you and I just made a deal and I'm going to allocate you 400 million shares of AMD. Okay, you don't get your shares yet. You want to dump off because you feel market conditions are right. You want to take your money, your buyout cash, sell out, put it in the bank, but the shares haven't been allocated yet. What would you do? Well, you could go in and you could short sell, right? Or you could take existing stock that you already have interests in and sell that because it's going to be a wash when you get your new shares allocated, right? There are a lot of different instruments you can use. Now, technically, you're not really supposed to be able to do that because of the impact it can have on the market. You can't sell off before shares have been allocated. It's not like you and me where we can go in and short sell at any time. If you're the company that's being acquired and you're being acquired in kind through shares, you're not supposed to be able to take and sell off in a short position or dump off before you've had the allocation go through because of the negative impact it has on the market. I'm pretty sure that's what Xilinx did because this was an exacerbated move down on the heels of that acquisition. What I call it shady, I'd say that it's not allowed in the United States, to my understanding. Certainly not in this fashion, this quickly when the deal is only just being certified. But, it's also hard to govern, particularly when there are foreign entities involved. I'm trying to be diplomatic in my wording. But I wanted to go back and understand it. And of course, look, the reality is the market did dump off. AMD would have pulled back, just not this hard. I think they took profits. I think members of Xilinx took big profits, 400 million shares. There was some heavy selling to take some profits. They obviously didn't sell all 400 million, but I think there was substantial selling, and that explains this trade. I don't ever like, even if I make money, I don't ever like being wrong on direction, unless I had like a huge move up and I expected direction to go up and down. And I'll often say that I think there's going to be indecision. I think when it moves up like Peloton, we'll also get a big move down if it triggers. This was one that I felt a little bit more bearish on, and I felt like even if the market pulled back, it wouldn't have been hit as hard. I had to go back and figure out what went sideways. So that's just a reminder. I became a professional in 2005. I've been at this for a long time. And I go back with that same level of enthusiasm and curiosity because I don't like being wrong. I accept it. And I'll always own up to anything that I do right or wrong. That's why I post my ideas in advance. But I like to know the story. If I make a mistake, I just have to know the story so that I can improve and just be honest with myself and say, hey, next time when there's a foreign entity involved and it is in different jurisdictions, I think you guys are reading in between the line, I will suspect that this is a greater possibility and not necessarily look at the way that it is regulated in the United States. But again, when we trade, this isn't going to impact us because we're in and out here. It's not like we'd get to this peak 39% up and just hold for the rest of the day. That's not the way day trading works. But this is just to give you an insight into my mentality and how I approach the market. And so the last one that we're going to look at here is Facebook. So like I said, everybody dumped off. You saw major dump offs. What happened with Facebook? Well, Facebook, I had this charted out just right. I feel that the metaverse hasn't been sold properly. I feel there's still weakness in Facebook. Their earnings were pretty hard hit. Reading between the lines here, I have a tremendous amount of respect for Peter Thiel as an investor, and he just stepped back from the Facebook board of directors. There hasn't been any reason given for that, so I'm not going to say it's because Facebook is going in the wrong direction, but for fundamental reasons, I felt like Facebook was showing weakness. I looked at the move up in the market. I felt like we would get a push up on the QQQ, which we did. We got a big push up, as everybody knows. I just felt it would take Facebook a little bit higher. And so my entry point was right around here. It didn't hit. I had a bid set in anticipation of the price moving up. Didn't get filled. Didn't hit my entry point. Didn't hit my bid. I didn't get filled. So many people took it and absolutely crushed it. I mean, look at this move. It was an 868% move. I blew it. I could have been on a little bit more. Now, in reality, I did go back, analyze, and review. I don't see anything in my process that I could have done better, other than potentially chase or not stick to the process that has yielded all of these consistent results. So I'm okay with that. Or to use a different term, I'm cool with it, right? People who did take it, fantastic. I didn't post this and brag about it as a win for myself because I posted it as a missed entry. And I did that just to remind myself, you missed it. I'll figure out later. That's how I work during the days. I figure out later. Did I make a mistake though? Did I mess up? Was there something wrong in my analysis or my process? I can't identify anything clear. Hindsight, I would say, well, I should have put it here. Yeah, that's fine. Great. You could look at any chart and say, well, I should have bought here and sold here. Sure. Do you have a reason? Could you have understood it? Can you explain it and can you anticipate in the future? I probably couldn't. Looking back, I did my analysis. I spent a good while on this yesterday. It actually was clear to me immediately. I was just digging in a little bit more on Facebook, but it was pretty clear to me immediately. I was comfortable with where I set my entry point, and in my process, that's going to be successful far more often than it's not. You're not going to nail every single trade. You can have the right idea, just miss your entry, and the real science is finding your entry sometimes. So completely okay with this, but I'm so happy that some people took it and benefited, because when I see retail doing well, when I see traders doing well for themselves, that's fantastic. And with Facebook, if you took this entry, you could not have lost. Like if you took it, most people got in somewhere here to here when they were taking it early. I mean, we come back to almost break even, and it's just dump off, dump off, dump off, dump off. So, most people have probably gotten out here. So hopefully that gives you a good idea, a recap, and an understanding. We had PTON, where I went against the options flow, and that the point there is being always analyze multiple data points. We had Facebook, a missed entry, where we discussed, hey, what happens when you miss these huge ones? Don't you feel bad? Don't you want to change things in the future? Look at what I missed. It was an 868% move. And no, I don't want to change anything in the future. And that's the importance of having conviction in a process. So you can understand, don't feel FOMO. And I didn't chase the price when I saw it pulling away, because I have to be disciplined. I preach, don't chase. And I can't chase. Otherwise, then I'm not being true to my convictions. And then we discussed AMD, which is really interesting. The underlying factors, having a quick move in something that goes the other direction. Again, all we really are concerned about is the move, but I do like to understand the direction because it helps me understand the market holistically and from a greater point, and just contributes to my ability to analyze in the future. So hopefully this was helpful. Check out profitstaken.com if you're interested at all in deeper engagements. I do have a newsletter and a tighter group where we have questions and answers. I also provide one-on-one coaching. Of course, check out my Twitter account, Profits Taken. Everything is 100% free, and I'm not changing anything that I do there. I like being able to help everybody on retail. And if you're looking to sign up to Unusual Whales to get options flow, check out my description. Everyone, thank you so much. Have a fantastic weekend, and I can't